Welcome back, everyone. Today, we're diving into a topic that will definitely redefine the financial world as we know it, and that topic is tokenization. I strongly believe that 2025 is shaping up to be the year when tokenization goes from a promising concept to a transformative force in global markets. You've probably heard the term being thrown around, but let's clarify, what is tokenization? Simply put, it's the process of converting real-world assets, think of your house, fine art, commodities like gold, or even shares in a company, into digital tokens. These tokens represent ownership or a stake in the asset, and they can be traded, sold, or even used as collateral, all while maintaining a secure and transparent record of ownership. Now, why is this so important? It's because tokenization unlocks massive efficiencies. It removes intermediaries, lowers transaction costs, enables fractional ownership, and creates 24/7 liquidity for traditional illiquid markets like real estate or fine art. Imagine owning a fraction of a Picasso painting or a slice of a skyscraper and trading it with anyone anywhere in the world in just seconds. So why 2025? The groundwork is being laid right now. Governments, institutions, and technology providers are converging to make this possible. And at the heart of this all is the key enabler, you guessed it, Chainlink. Let's take a closer look at why Chainlink is already dominating this tokenized landscape. You can easily describe Chainlink as the oracle backbone of tokenization. It is a blockchain agnostic oracle network that connects smart contracts with real-world data and systems. And here's why it's critical for tokenization. Interoperability with the cross-chain interoperability protocol, or CCIP. One of the biggest challenges in blockchain has been the lack of seamless communication between these different blockchains. Asset tokenization on Ethereum might not easily interact with those on Solana or Avalanche. Chainlink CCIP is a game changer. It allows tokenized assets to move freely across blockchains while maintaining their functionality and security. I've already talked about this in previous videos. For example, a tokenized property on Ethereum could be used as collateral for a DeFi loan on another blockchain without any manual intervention. This kind of cross-chain fluidity is crucial for tokenization to reach its full potential. A second big thing is that Chainlink is already working with financial giants like Swift, ANZ Bank, and other major players to connect traditional financial systems with blockchain-based tokenized assets. Swift, for example, handles the messaging infrastructure for trillions of dollars in daily transactions. Chainlink's role in bridging traditional finance with decentralized finance could open the floodgates for institutional adoption of tokenization. For tokenized systems to work, they need to be secure, reliable, and trustworthy. Chainlink's decentralized oracle networks, or DONs, are operated by robust entities like Deutsche Telekom, ensuring the integrity of data that powers these systems. This level of security is crucial, especially when we're talking about assets worth trillions of dollars. The implications of tokenizations are mind-blowing, and the implications span across industries. So what markets will tokenization transform? Real estate is one of the most exciting opportunities for tokenization. Instead of needing hundreds of thousands of dollars to invest in a property, you could just own a fraction of a high-value property for just a few $100s. This fractional ownership would democratize access to real estate investment on a global scale. Commodities like gold, oil, or even carbon credits can be tokenized. By digitizing these assets, it becomes easier to trade them globally, create derivatives, or use them in decentralized finance applications. With NFTs paving the way, tokenization could bring major changes in the art and collectibles market. Fractional ownership of iconic art pieces could turn a traditional exclusive market into something accessible to millions. Traditional financial instruments like stocks and bonds can also be tokenized for instant settlement, 24/7 trading, and global access. Anywhere, anyone can invest in equities or debt instruments without any inconveniences. The numbers speak for themselves. Analysts predict that the global tokenization market could hit 16 trillion by 2030, with significant growth kicking off in the next couple of years. By next year, tokenized assets could account for 10% of global GDP, unlocking liquidity and efficiency on an unprecedented scale. Chainlink already boasts thousands of integrations across DeFi, gaming, insurance, and more. The extensive network of developers, users, and institutions create a flywheel effect. The more participants in the Chainlink ecosystem, the more valuable it becomes. This network effect positions Chainlink as a leader. Its infrastructure is becoming the de facto standard for for security connecting tokenized assets to real-world systems. Another reason next year could be a tipping point is regulations. Regulators worldwide are starting to embrace tokenization. The European Union's MiCA framework tries to provide clarity on digital assets, while the US and Asian markets are crafting rules that could foster innovation. I'm not saying MiCA itself, for example, is a positive thing for crypto, but the fact that governments are trying to regulate crypto is a good thing on its own. Institution adoption is also gaining steam with banks, asset managers, and even centralized banks exploring tokenized systems. Chainlink's existing partnerships with financial giants give it a front row seat in shaping these developments. Of course, there are some challenges. Scalability, regulatory hurdles, and market education are all barriers to this mass adoption. However, with Chainlink leading the charge and solving core issues like interoperability, security integrations, these challenges are being addressed head on. The technology is ready, the partnerships are forming, the regulatory frameworks are emerging. Tokenization is a paradigm shift, and Chainlink is at the epicenter, building the bridges, laying the infrastructure, and driving adoption. As we approach 2025, the pieces are falling into place for tokenization to go mainstream, changing how we think about ownership, investment, and value transfer. If you're not paying attention to Chainlink and tokenization, now is the time to start. Another better way to start by subscribing to my channel. I hope you are as excited as I am for the future. Let me know your thoughts and comments below. And as always, don't forget to like and share and subscribe for more content. I would definitely appreciate it. Until next time, stay curious and yeah, see you in the next video. Bye.